Hello traders, this is Rich from Tradesight. This is the Tradesight Market Preview for the coming session. This is going to be for Wednesday, July 17th, 2013. This is going to be the Wednesday before options expiration this cycle, so this could have some special implications, and we'll talk about that a little bit later. The market today had kind of a distribution day where we had all of the major averages lower on the day. We had negative market internals for the most part, and we'll dig down into those all in detail in just a little bit. First, let's turn our attention to the major futures contracts, and let's start with the ES futures. All right, so here's a look at the ES futures. You can see that we have this dark body candle here at range high, which is never a positive sign. We have to see if we can hold above the recent breakout here. We've got this gap window to deal with, coming in at 1660 or so. And below that, we're going to have support with the 10 EMA. So for right now, the market's starting to take a little bit of a recharge here. MACD is still positive, and you can see that we still have some momentum here, but we are starting to level off here just a little bit. If we proceed and continue to the upside, the previous 2 days highs will come in play at 1680 and a half, and then 1687.50. That 6/8 level is the next challenge, which is on the Murray Math box. NASDAQ side looks very similar, except we're a little bit deeper into the countdown for the secret. We're now 6 bars up in the secret countdown. We're going to find key support at 7/8 at 3046. Key resistance, which is going to be very, very big, at 3125, because that's the 8/8 level on the Murray Math box. Also note that we do have this little breakaway gap here, so if we do start to roll back to the downside, that's going to be a definite point of interest. 3024 and a half or so. Now, as far as the market internals go, I want to look at the ones that move the slowest and are the most important, which is the cumulative advanced decline lines. You can see that the cumulative advanced decline line on the New York side has not recorded a new high, even though the ES futures that we just looked at are breaking out to new highs. This is definitely a cause for concern for the bulls, and very, very negative. The NASDAQ side is back up into the trend channel, which is fine. We've had some pretty decent relative strength in NASDAQ. NASDAQ did outperform the broad market today by a decent amount. So we really need to see the NASDAQ, if it does take a pause here, we need to see strength rotate back into the broad market cyclicals, the broad market banks, all the broad market heavyweights. And the key thing is going to be we need to see some better performance out of the energy names. The energy names are the key, very, very broad late cycle play, and we need to see those kick in and start to lift the S&P side. All right, now looking at our key risk on risk off metric, which is the S&P TLT cross, or the ratio chart, if you will. You can see we've gotten up in the area of the upper boundary of our trend channel, but we're starting to retreat here. This is definitely another little negative that's creeping into the market. If we reach all the way back down here to the lower trend line, we're going to find some support there, and definitely find some resistance up at the top. But right now we do have a negative bias. Elsewhere internally, the SOX NDX cross was to the positive side today, which is a positive. Even though the NASDAQ was lagging today, the SOX did come on, so that is definitely short-term positive here. If we can build on this and take out this prior high, that would be very, very bullish for the NASDAQ side of the market. The New York trend today closed at 0.97. That was good enough to inch the 10-day average down to 0.93. Keep in mind that if we get to the 0.85 area, we're going to record a fairly substantial reversal warning for the market, where they're going to need to take a breather and take a break. So definitely keep that in mind here. If we keep moving towards 0.85 and finally tag that level, we're going to be on guard for a reversal in the market overall. Okay, looking at the sectors ranked from best to worst, definitely the best sector today was the XAU by a wide margin. We had a little downside in the market today, and we definitely had some rotation back into that defensive index. That was definitely very positive on the day. The SOX was also very positive on the day, definitely outperforming most of the other major groups today. Bent down at the bottom of the page, you can see the broker-dealers were last laggard. Even after Goldman Sachs reported, Goldman Sachs closed on the low, so definitely keep that in mind and keep that on your radar for tomorrow. Oil services were weak. The BTK was weak, and the banking index was weak, probably also along with the kind of sympathy with the broker-dealers in general. Here's a look at the XAU. The XAU did have a very strong day, but it's still a ways away from making a real turn here and getting back up into positive territory. We're going to have some decent resistance here at this 4/8 level at the 100 level in the index. That's going to represent the 4/8 level on the Murray Math box and also approximately the 50 DMA here. So if we get back and above that, we can really start thinking about some better performance to the upside and possibly some momentum. The SOX index was also fairly decent on the day, but you can see that we're still up in this extended area. If we could definitely get up to this 500 level now. We've got room in the bar count. We're at day 6 now. We can go run to day 9 without having any problem as far as timing goes. And if we do so, we should expect some pretty good resistance at that 500 level. Taking a look at the OSX, which was one of the laggers today. Pretty good distribution day. You can see how we had this congestion around the key 8/8 level, which is strong resistance, and also this potential double top forming. So we have to see how the market handles this. It did dunk down below the 10 EMA today, but was able to close above it. Here's the broker-dealer index. We don't look at a lot, but you can see that we had a kind of a range high king and queen setup here. We had a very positive candle followed by a very negative one. We're still hanging above the 10 EMA, so we're still short-term positive. But if we close down below 131.25, we'll be below that 10 EMA and return to short-term negative. Looking at the banking index, here's the BKX. And again, kind of a similar situation, but this one's in the overbought territory. We've got major resistance at 65.5, which is plus 2/8 on the GAN box, and also that risk level from the secret exhaustion signal. Turning our attention to the crude futures. Crude futures are just kind of hanging in the same area. Haven't been able to really push up any higher. Just keep an eye on the MACD here. This is starting to roll over and could easily pull down. This definitely led the broad market to the upside. And if we roll to the downside here, there's plenty of room to get back down to this 4/8 level at 100. Taking a look at gold futures now. Gold futures really didn't do too much on the day. It was really a rotation into the precious metal miners. But just keep in mind here that the mining stocks often lead the actual underlying commodity. So definitely keep this on the radar. We've got a key breakout here in the gold futures. If we get back above 1297.5, we're going to have a breakout to the upside, and we can put this 50 DMA into play. So keep an eye on that for tomorrow. All right, folks, just keep in mind that tomorrow is going to be the Wednesday before options expiration. So after the first 60 minutes of play, if we see a bias develop, definitely want to trade in favor of that and not fight that. That could be the options players starting to unravel their books and position themselves for expiration, and we welcome that. And we're going to be looking for some kind of a good bias to develop 60 minutes into the market tomorrow. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.